Welcome. This is Earnings Edge on NDTV Profit. I am Agam Vakil, and we are taking stock of the quarter gone by for ABB India, where we all know it's been a strong quarter, judging by the reaction of the price and in terms of the stock market. Well, it does seem like the investors also like what they're seeing with respect to the first quarter of the calendar year 2024. Well, I'm in conversation with Sanjeev Sharma. He's the MD of the company, and along with him, we also have TK Sridhar, the CFO of ABB India. To both of you, thank you so much for joining us.
Thank you, Agam. It's a pleasure talking to you.
Thanks for having us.
Likewise. So, well, Mr. Sharma, I'm going to start off with how and you envisage this particular year going in. We've already started off on a very strong note. The question really is that can we expect the same amount of growth that we've seen back in calendar year 23? Can that be replicated in 2024 based on the kind of order book that you have, your expectation of execution on that order book as well?
If you look at ABB last 3 years results, so we have grown from 21 onwards 27% CAGR on the orders, and also our profitability has expanded 700 basis points during this period. So we have been always informing you and your colleagues that we see good market formation ahead of us for 19 businesses that operate in the country now, and which engage in 23 market segments, which are fairly diverse in nature, and they have different cyclic tendencies. So as we participate in the market in these segments, and also more penetration in the geographies, we see a good pipeline and a good market formation. So we are quite positive and quite optimistic that the trend that we are in, that continues for some time.
Right. Well, Mr. Sharma, if you can also tell us about what are the themes that are going to likely play out for ABB India in this particular calendar year. Of course, notwithstanding the general elections, I believe, and I'm not entirely certain if that will in fact have any sort of disruption in your business going forward. But in terms of the order inflow, where is the company focusing on, and rather what set of areas is the company focusing on going ahead?
So in terms of disruptions out of election, I think our Q1 numbers give a hint that we have not seen any disruption as such. And going forward in Q2, which is say, April to June quarter, I think we see the market formation is good. And I think our engagement shows us that there's a positive sentiment in the marketplace. Now, with respect to the market segments, which are playing well, I think the data centers are one, electronics manufacturing, and the railways and metro. They are really on a high growth side of the segments, and we have a portfolio which caters to these market segments quite well, and market is rewarding us well there. Right. Also, there are market segments which are growing, say, 10 to 15%. These segments, be it renewables, be it in automotive and warehouse logistics, we have building and infrastructure, power distribution, food and beverage. They continue to also track well for us for the breadth of the portfolio that we have. And then there are classic market segments, which are the large capex companies, be it metals, oil and gas. We look into mining areas, and the number of segments which we call it the classic core sector. There again, we see good capex formation, and some of them are investing well in coming months and coming years. So we see a good formation of the market there as well.
Right, Mr. Sridhar, let's talk about margins then. A considerable expansion on a year-on-year basis, and I reckon that investors were expecting an expansion, but not to the tune of what we have seen in the first quarter. What's the way ahead? Are we expecting to sustain these margins? Could there be possible further expansion here based on the segments that you guys will be focusing in on as far as this year goes?
Thank you for this famous question. So I think before we look into the future, let me just give a bit of a color as to how did we achieve this particular expansion in this particular quarter. If you look at the income statement of ABB for this particular quarter, it has been mainly driven by the material cost reduction. So material cost, which used to be 63, 62.5% of our revenues. We are hit and a low of 59.8. I think they're almost 300 to 400 basis points lower. So I think this is basically a product of quite a few factors, right? So the first factor is, of course, we are now executing those orders which were booked during the time when the material costs were pretty higher. But subsequently, during the execution, the material costs have softened. So we are enjoying that particular benefit, what was there, number one. And the number two is, we are for the first time achieved 3,000 crores in revenues, which is a good amount of capacity utilization leverage what we have got. And third, but most important point is the mix of orders what we have executing at this point of time. The first quarter was definitely seen a good contribution by the services segment, and that actually has a very high profitability compared to the normal production and sale of products as well as execution of projects is concerned. So according to me, this mix, this good margin orders what we executed contributed a lot. So now coming to the how does it play out in the future? I think the revenue has to come from the backlog. Backlog has got a good amount of both system orders and the project orders as well. So they will tend to get executed at its own margins. And the 40 to 50% of our revenues every quarter come from those orders which we book during the quarter and execute as well. So now these particular orders, what we will do going forward, will have definitely an adjustment to the current market material price levels. So in a nutshell, I think we will definitely see an adjustment to the orders what we book going forward in the market, and therefore our endeavor has been, right, so how to maintain consistency compared to the previous year and slightly definitely improve with respect to the leverage efficiencies what we will get in. So overall, I think to close out the question, is that last year we did a 12% of PAT on a yearly basis. I think with the increased revenues, what would happen in this particular year, so naturally we should be slightly better off in that, and at least also to maintain that as a minimum.
Right. Mr. Sridhar, what kind of cash levels are you looking to invest in various businesses across for this financial year?
So I think rather than in business, all businesses, we have 19 business divisions. All businesses are running at cash positive. That's the first thing which we need to do. That means the net working capitals are pretty strong. An ability to collect the money and manage our inventories and payables are on the right direction. So having said that, I think if you look at the money utilization perspective, 30 to 35% will definitely be utilized for fueling and supporting this particular growth, which is happening at 20% quarter on quarter, number one. And number two is that, and we're also looking forward for organic, inorganic options to invest this money. So for the organic, at least I think every year we spend almost 180 crores every year. So that would continue to be an option for us because that's a demand in line with the demand, which is increasing. And the balance is something what we will look at distribution to the shareholders as dividends. So that's something which has been consistent, and we do that as well.
Right. Mr. Sharma, if you can come in on the data center business, how are you envisaging that will pan out this year as compared to the last year?
My belief is it will be better than last year because this particular market segment and the data centers which need to be built to quench the thirst of digital services and digital businesses, cloud services in the country. I think that cycle has just started. I think it has to create a much larger footprint going forward. All the global major as well as local companies which are interested in the data center setup, it's continue and it will be an accelerated pace compared to 2023. All
right. A final question then. I reckon this was more to do with, if you can just consider decarbonization as a theme. What's the way forward here? If you could elaborate on this one, Mr. Sharma, how does this pan out and how does this fit into the scope of things for ABB India looking forward? We have been focused on sustainability by practice initiative in the company. And it was an accelerated initiative since 2021. Just to give you kind of a data around it, with a baseline of 2019,
we have been able to reduce to 88% of GHG emissions out of ABB India. That means all our ABB campuses in the country, which are 5 of them with 27 factories, we are using 100% renewable energy. We have single-use plastics, which are totally eliminated. Half of our locations are now water positive. We are putting more water in the ground than we take it out. 97% of our waste gets recycled. 2 of our locations have become zero waste to landfill, and we intend to convert all these locations to zero waste to landfill soon. So those kind of initiatives which are in play, and the water's recyclability and many other parameters on scope 1 and 2 initiatives, we are in a very good way to achieve it. And now we have a concentrated focus on scope 3 emissions, and that's again we have identified areas. We are working with our suppliers as well as our product groups and our factories to make some good strides there. So I think this is a journey we do because it's a right thing to do, and that's what our management believe, and we will continue to stay focused and continue to gain out of this, because it's not only is a good investment for sustainability, and we see good returns in terms of employee motivation as well as our stakeholder belief in how this company operates while it continues to grow, is profitable, but also has a lot of focus on sustainability topics.
All right, gentlemen, we'll leave it at that. Thank you so much for joining us here on NDTV Profit.
Thank you very much, Alam.